Today, TikTok is suing the US government, just the latest move in the saga over the viral video app. We dive into what could happen next. Plus, stop the presses on those obituaries of New York and San Francisco. Historical economic data shows cities almost always bounce back. And finally, in a sign of the times, the Dow Jones Industrial Average gets a makeover. I'm Mackenzie Sagalos, and this is CNBC After Hours. Let's start with a look at Wall Street's day. Now, it was a mixed one, as the S&P 500 and NASDAQ closed at all-time high levels yet again. Both of these indices have turned in 4 consecutive wins. But the good news ends there. The Dow closed lower for the first time in 4 days. The index was actually dragged down by Apple, which posted its first loss in 6 days. Apple was the only one of the quote-unquote Big Five to finish in the red today. Now, for the record, this refers to the 5 big tech stocks that have been leading the broader market higher, the others being Amazon, Google, Facebook, and Microsoft. Now, that last name there still engaged in deal talks to potentially purchase TikTok from its current owner, Chinese firm ByteDance. And those TikTok tensions have certainly heated up this week. The app is suing the U.S. government. And remember, earlier this month, President Trump signed an executive order banning TikTok in the U.S. unless it's sold by the middle of September, perhaps to Microsoft. Now, one result of the lawsuit so far, TikTok finally disclosed its user numbers, and they are staggering. CNBC.com's Alex Sherman has been reporting out the TikTok saga, and he can wrap up everything that we know right now.
Yesterday, TikTok sued the U.S. government for effectively banning the app next month if TikTok does not have some sort of other remedy, such as selling itself or working out another type of agreement with the U.S. to stay active. So TikTok filed a lawsuit in federal court against the Trump administration over the executive order that would effectively ban the app on September 15th. Obviously, this is detrimental to TikTok for several reasons. Not only would they be effectively shut down here, but within a shutdown, even if it were temporary, because it is a user-generated app, it doesn't have contracts with its talent. So even if TikTok were only banned for a short amount of time, any sort of time where it was down, it risks losing major value because it risks having these people go elsewhere and then having all the eyeballs go elsewhere too. TikTok has said the U.S. has prevented it from due process. In other words, the U.S. made a decision to ban the app and has effectively ignored any sort of response or evidence that TikTok has, where TikTok has said, we are not, in fact, a national security threat. Now, the other remedy that TikTok is working on is theoretically selling its U.S. operations, also Canada, New Zealand, and Australia, to either Microsoft or Oracle, or maybe some sort of third-party bid that can emerge in the next few days. There's no question that Microsoft is the favorite to buy TikTok. It's a cleaner transaction. Microsoft would buy the operations. Microsoft has experience with consumer-facing applications to some degree. Microsoft has been working with the government and TikTok to try to get a deal done since at least July, more than a month. Still, the pricing on TikTok seems very unsettled. I think it will be in the tens of billions. What we found out a couple weeks ago was that TikTok has more than 100 million US monthly active users. We also know global numbers. For the first time yesterday in its lawsuit, TikTok released sort of the granular data on global, where they said in January 2018, they had about 54 million users globally. And July of 2020, so a little bit more than 2 years later or so, the number was almost 700 million users. It wouldn't surprise me at all if TikTok announced they had surpassed 1 billion global monthly active users in the next couple months.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
everybody's concerned about the post office when it comes to mail-in ballots. That's not a problem. The post office can handle it. If everybody voted by mail, that would only be 3/4 of what the post office delivers on an average day. They can handle it. The real concern is, can the election office handle it?
The bottom line is, we estimate that App Store is probably like 6% of total revenues for Apple and 10 to 15% of EPS. So if you want to take the worst case scenario and you say App Store goes to zero, that is basically your impact going to be on the numbers. But the bottom line is, I think Apple as a stock has not moved for a specific reason. It's moved for a multitude of reasons.
So we've been in discussions with them for several months. We're delighted they've reached a decision. I don't believe this was a rushed decision or a pressured decision, because they've been rather methodical and looking at the data over several months. And so I don't see this as a rushed decision.
A Zoom world is an okay transition, but people like to be together. They like to work together. I don't think everyone will work from home all the time. I think, in fact, we will return. It will take a few years. New York has been through many such scenarios, and New York will return as well.
Okay, I want to stay on that last topic that Eric Schmidt was talking about, the permanence of remote work and the alleged death of big, heavily populated American cities like New York. Now, you can barely go on the internet these days without reading a new article about the mass exodus from major cities. No need to go into the office anymore. Historically low mortgage rates. You can afford more space in the suburbs. But is the flight away from cities the same thing as a death notice? Well, COVID-19 isn't the world's first pandemic, and turns out historical economic data appears to prove that cities like New York are down but not out. CNBC senior economics reporter Steve Leisman did the research, and he can explain.
I think there's a couple historical and a couple economic points that are worth making. First is, this is not the first time that civilization has confronted an epidemic, and that rich people especially, but all people, have been fleeing cities during epidemics for as long as there have been cities, which means over millennia. Two researchers look at two pandemic outbreaks specifically, an outbreak of plague over many years in Amsterdam in the 17th century and an outbreak of cholera in Paris in the 19th century. They found that in both cases, housing prices fell during the first year of the pandemic and in the second year, and eventually they came back. They found that people returned to cities over time. There is some good research backing up Seinfeld's contention that New York City and other metro areas will come back. In my research, I found that there was an outbreak of cholera in New York City in 1832. People fled from Lower Manhattan to guess where? To Greenwich Village, and that was the boom of Greenwich Village. So these things, they create new areas, people explore them, but Lower Manhattan did just fine after that. Certainly technology presents a challenge to cities, and yet companies, businesses, people, industries have been aggregating in cities for a long time, and there is definitely an upside, an economic upside, a cultural upside, a social upside for people to aggregate and amass in cities. It's not just economic, there are other reasons, but also if there's one area that the research shows is a potential city killer, it is the violence. There's been research done about the riots in the 60s and the long-term effects that had on housing values and businesses in the inner cities, and it was very, very debilitating to those areas. However, that was a sustained period, 4 or 5 years of riots. I don't know that the level of violence we have right now, which seems linked to the epidemic very specifically, seems very linked to the recession. I don't know that at this point, I would suggest it has not to this point risen to the level that created the kind of negative effects that we saw as a result of the riots of the 1960s. What we're going through right now, it's not the first time we've gone through it. Civilizations have endured epidemics. They've survived. It doesn't happen magically. It happens through policy. It happens through great effort.
Okay, time for the numbers round. And today, it's the Dow Gets a Makeover edition. First up is 3. Now, in a major shakeup, the Dow Jones Industrial Average, which is a benchmark stock market index made up of 30 different companies, is kicking out 3 stocks: energy giant ExxonMobil, drug company Pfizer, and defense manufacturer Raytheon Technologies. They'll be replaced by enterprise tech firm Salesforce.com biotech name Amgen, and manufacturing giant Honeywell. So why the change? It's actually all about fellow Dow stock Apple. Now, we discussed weeks ago that Apple is splitting its stock, making each share much cheaper. But unlike most other big stock market benchmarks, the Dow is a price-weighted index. So a lower Apple share price throws off the makeup of the Dow, which is supposed to reflect the broader U.S. economy. Adding these three names increases the Dow's exposure to tech, which is a larger part of the economy now. Next, 92. Next Monday, when these Dow changes take effect, will be the first time in 92 years that ExxonMobil will be absent from the Dow Jones average. The oil and energy behemoth has been part of the index in some form since 1928, when it was first added to the benchmark under a different name, Standard Oil of New Jersey. And finally, 17. Right now, Apple is the most heavily weighted component of the 30-member index. But since its price will drop after its 4-for-1 stock split, it will drop down to the number 17 spot, significantly reducing its influence on the Dow's movements. In 2020 alone, Apple is responsible for adding more than 1,400 points to the Dow, making it by far the largest contributor to the index. That's it for After Hours, but before we go, here's one more thing to keep an eye on. Tropical storm Laura was upgraded to a hurricane this morning and is expected to strengthen before it makes landfall on the Gulf Coast either Wednesday or Thursday. Get up-to-the-minute storm developments by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday, Thursday, and Friday with a new edition of After Hours, so be sure to catch us then.